Hello, everyone. Welcome to the opening playbook. We are going to start our pre-show to get people who are newer around here oriented to what we do. Whether you're new to trading or just new to our group, welcome to the opening playbook. Our mission here is to be a bridge for new and advanced traders to go beyond outdated market narratives into deeper understanding. We offer market insights as timely analysis of what's moving the markets right now, trading education to help you build real skills beyond surface level tips and tricks, and live trade ideas, real-time recommendations you can act on immediately. Opening Playbook is a free daily live webinar. Your hosts of the show are Nathan and Graham. Nathan has over a decade of experience trading Forex, stocks, and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of The Income Machine, Overnight Options, and more. He's a husband, a dad of 7, and the publisher here at the pub. Graham Lindman is also an options expert with over a decade of market experience. He studied technical analysis under 2 of the top minds in finance. He developed wrap order option trades for cost-effective entries, as well as created lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. He's also a husband, a dad of 2, and the copy chief here at the pub. Now, a lot of people in the stock market education industry will tell you that trading is easy if you just know their quote-unquote secrets. Well, that's not us. We'll tell you the hard truth, which is that trading is complex and takes time to learn. But we make the learning process much easier. The opening playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more mature trader, giving you the opportunity to be more successful, whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. Now, it's important to remember that you should never trade with money that you can't afford to lose. Of course, nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you can't afford to lose. And let's be ultra clear, any type of trading involves losing some of your trades. It's inevitable. Controlling your risk will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise is that we'll be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. And here are some rules of the road to get you started. Stay calm. Try to trade without emotion involved in your decisions. Go at your own pace. Don't try to keep up with us or other traders. And ask questions freely. We really do want to help in any way that we can. And to help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner I'm posting above. And for answering that quick survey, we'll give you custom content to better help you by using your feedback to improve our classes and education, and give you a free options cheat sheet, a digital, easy-to-understand options guide that will look something like this. Now, I'd like to give you some tips on using our webinar platform before we get started with our regular program. The button next to number 1 here, we call the hamburger button. That will collapse the green column on the left, and you can leave it collapsed because we don't use it for anything. Number 2 is the pause button. You can pause and resume the presentation whenever you'd like. Number 3 is the mute button. You can mute and unmute the presentation's audio. If you find that you suddenly lose audio during the presentation, make sure you haven't accidentally clicked or tapped on the mute button. Number 4 is the main announcements section, where trades that we take in the current session will be posted, as well as helpful links that can always be found there. Now, this section will only be visible if you're on a large screen. If you're on a mobile device, You won't see announcements here, but we do have another area that you can see them that we'll get to shortly. Number 5 is the toggle for going between light and dark mode, whichever you prefer. Number 6, the monitor icon will enlarge the presentation area without hiding the communications or chat area. Now this button is shown in 2 places, and I highly recommend using this because it'll give you the best view of the presentation without hiding the chat from you. Number 7 is the picture in a picture button. This will reduce the presentation to a floating window so you can do other work behind it, such as go to your broker platform on a mobile device. Number 8 is the full screen icon. This button will enlarge the presentation to take up the entire screen, covering everything including the chat area. Number 7 and number 8 may or may not appear for you depending upon what device and browser you are using. Number 9 is the low latency button. Toggle this off if you're having any audio or video issues, such as buffering. Number 10, all the way on the right, is the communications area. This is where group chats, announcements, and private messages will appear depending upon the tab that you have selected above. At the bottom, number 11, is where you'll type your outgoing message. You can press enter or tap or click on the green arrow to send it. Number 12 is where you can start a private message to a host by tapping or hovering on one of their group chat messages and clicking the double speech bubble icon that appears. Now you can only private message hosts, not other attendees. At the top, number 13, that button will collapse the communications area, giving you a larger area for the presentation, but you won't see any of the communications that are going on. Number 14 is the group chat. This is where you'll read and write messages that the entire group can see, and this is the default tab that you'll see when you sign in. Number 15 is the announcements button. This is where you can see those same announcements that were in the larger area that we covered earlier, but this will be available whether you are on a mobile device or a larger screen. Number 16 is the private messages tab. This is where you can see any conversations that you have started with the hosts or they have started with you. And if you have a new message waiting for you, you'll see a red dot below this icon in the toolbar at the top. And last but not least, number 17 is the button that will pop out the communications area into its own window. This is useful if you have multiple screens and you want to go full screen on the presentation and view the chat in a separate screen. Now, we have a version of this guide that I just went through that you can view on your own. The URL to get to that guide is marketspg.com/wisepub, and there's now also a link to it in the announcements section. And that's it. So once again, welcome to Opening Playbook. Don't forget to complete that survey to get your free cheat sheet. And now we're going to play our theme song and get to the regular show at the top of the hour.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The Markets Playbook is finally here. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options and plays in a live display. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options and plays in a live display. Every move counts in the game they play. Open Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh. Step by step, they break it down. No confusion, no spinning around. With every trade, they set the tone. Making big calls on their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Good morning, everyone. Welcome to the opening playbook for Thursday, April 9th. I hope everyone is having a good day so far. We are going to have a fun and exciting session for you today. We are going to have our normal Thursday guest hosts, JD and Silas will be here. And we are also going to have some extra guests a little bit later in the session. Chris Pulver and Kane Shea will be here. We're going to talk about an exciting contest that they had going on and what happened with that. We're going to hear about what's going on in the market and all kinds of fun stuff from our pros. So stick around for that. How is everyone doing this morning? Good morning to everyone in the chat. Wild Crew, what's up this morning? Barbara, James, Dana, Debbie, Roger, Manish, Barbara, J Stro, JL3D, Rick, Gene. Good morning, everyone. Give everybody just a minute or two to get in here. I know we had a bunch of meetings and stuff this morning, so everybody should be rolling in here right about now. And like I said, we have an extra special session today. Not only do we have our Thursday guest hosts, JD and Silas, but we're going to have some extra guests on later in the hour as well. And here are the guys.
Good
How you
morning,
doing,
good
JD?
morning.
Good morning. Where are you joining us from today?
Happy Thursday from Southern Arizona. I'm in Tucson.
All right.
Yeah, I've been going back and forth. My mother lives down here, and we had a 85th birthday celebration for her last week,
Yep.
and that was, of course, she didn't remember any of it.
Well, I'm getting there myself, you know. I'm getting there myself.
I shouldn't joke. She right now she has minor dementia, according to her neurologist. So
Yeah.
we're just
It,
navigating the beginning stages here.
sometimes if you don't laugh, you cry, right?
It's funny you say that because I'm a big believer. Laughing is such a great tonic, and even difficult topics deserve good humor, at least from my perspective.
Yeah.
Otherwise, I mean, what are you going to do? Bury your head in the sand?
Yeah. Yeah. All right. Well, it looks like we have Silas joining us. I think he's still getting his camera going here, but
Can you hear me, guys?
yeah, I can hear you. Just
I,
can't
I'm,
see you.
I'm, I don't know, the video camera is being blocked. I'm trying to in my Google settings, and it
All
keep
right.
getting flashings. It's blocking. I don't know what's going on.
Well, sorry that we don't get to see your lovely face, but at least we can hear you, and your screen share should still work. So
Yeah,
really, all we really want you for is your charts anyway.
there we go.
Oh, okay, fine. Well, we'll take
Sorry,
that.
you get to see me anyway.
We just want you for your brain, but we'll take your lovely face as well. Um, how you guys doing this morning? What's going on?
Well,
Good, good.
I think the biggest story is we now know who Satoshi is.
That's right.
I just the mystery has been apparently, of course, he's denying that he is Satoshi, which is a fictional name for the creator of Bitcoin.
I missed that. Is it Trump?
I, I wouldn't be surprised.
After all the times he said China, and for him to go with an Asian name would be ironically hysterical. But no,
According to the New York Times, a gentleman by the name of Adam Back, who is a coder of note um, of the mid to late 90s, I guess, is when he did hash cash, or I can't remember what something to do with hash, and not the hash you're thinking of, David.
hold on. I was a programmer. I get both ends of that. All right. Yeah, yeah. But yeah, hash is kind of like encryption, not exactly the same, but similar.
Yeah, yeah. So the theory, according to the New York Times, was that this backstory, so that he could deny that he was the creator, he invented this fictional character, and then it was a big smoke and mirrors thing. And the reason it's important, and this is interesting to me. I don't know, Silas, if it's interesting to you, but um, Satoshi owns a massive amount of Bitcoin. Okay, it's like 44 million coins or something like that.
Wow.
He is the largest holder, even more than Strategy, right? So whoever he is sitting on Bitcoin that is quite substantial. Now, the interesting part to me is that Adam Back is now a CEO of a company that is about to go public. And so the fact that he owns so much Bitcoin, if indeed he is Satoshi, is a material fact that ought to be disclosed. So, because obviously he can move the markets if he starts dumping his coin, not that he would, but it is, I mean, to me, it's just another reason that I would just stay away from Bitcoin. I mean, my goodness, if this guy decides to cash out or something happens to him, or who knows what could happen to the market if that supply went onto the market.
Yeah, no doubt. I was looking at Bitcoin to see if it had any type of react. I don't know when that news came out. I guess it was overnight, maybe.
Yesterday,
Oh,
yeah,
yesterday. Okay.
yeah.
Basically flat. But
It's funny
yeah,
because most people probably think that, okay, well, like if you want to buy Bitcoin, you can always buy Bitcoin, right? There's always plenty of, like when you think of it as like supply demand, there's always plenty of Bitcoin, right? There's never a problem. But when you think of it in terms of what you just said, somebody dumping it into the market has a tremendous effect on the price and the value of it. So there's a difference between availability, right, and like supply, right? There's a difference between how easily you can get something and really how much supply there is.
Right.
Hello, Nathan. Good morning.
Oh, good morning.
Right.
How's everyone doing? Sorry, I went a little long on my little member meetup there. Hope everyone is
Now you're supposed to
doing well.
come in with the big L on the forehead.
JD, didn't you give me enough grief during our last meeting?
I can't help it.
$9.
David and I were
$9.
I was just talking with David before you got on that we had a 85th birthday reunion party for my mother last week, and I said, of course, she doesn't remember any of it. So this is my nature, Nathan. Just so you're not alone. I give grief to dear old mom as well.
Yeah, to 85-year-old women, JD.
We-
I can
we-
see
we-
that. I can see that.
85-year-old women with dementia.
Yeah,
We only pick on the ones we love and the ones that won't remember it tomorrow.
yeah, Yeah, perfect. Well, I hope everyone is doing well. I'm just here as an attendee mainly, but I want to do at least show my face and say hello because I told all my folks in our member meetup I was hopping over. So, really interesting market. JD and Silas, I'm curious to hear your thoughts. I made the statement yesterday. I think the market is priced quite reasonably right now. We're kind of somewhere in between. We've got a ceasefire, we've got net good news, but we don't know if we're fully out of the woods. But we're kind of valuing it accordingly. So I'm actually taking a lot of neutral trades right now, even though we're kind of suspended in chaos. And I think everyone's gut reaction is it's going to rip like crazy or it's going to drop 3% and fill this gap. Historically, that's not actually what happens after these big gaps. More often, people don't necessarily understand. It feels like it should when you see a candle suspending in anti-gravity in the middle of your chart. It looks bizarre, but I think the market's done a pretty good job trying to figure out where we should be here. It's just the ATRs are so big, so to balance out where we are, yeah, you got to take a 3% move in the stock market. Well, that's because we were down 8.5%. So I'm curious to see what you guys think. I think Kane is still leaning a little bit more bearish. I'm pretty much dead neutral, and I'm curious where you guys find yourselves.
That's a good question. I had an epiphany yesterday. While everybody is focused on the Middle East and peace, I was really diving into the earnings report from Delta. And the reason I spent a lot of time on that was I was looking for clues regarding inflation. And here's a dirty little secret, Nathan. Corporations love inflation.
Yeah. Jamie, I will send you my article about this. I feel like I didn't get enough support from the common man when I talked about how the divergence of the everyman economy and the corporate economy is the best thing ever for them. And it actually typically means a bullish stock market, not a bearish stock market, at least until the other shoe drops. I think it's one of the great misunderstandings about how the stock market works. So you will find no disagreement from me. When things go up 2 times in value and you own 1 trillion of those things, guess what? You're really happy about it. So
it reminds me of a quote from a gentleman by the name of Neil Kashkari, who you may be familiar with. He's a Federal Reserve governor and of some substance and note, so he's often quotable and all that kind of stuff. But he was in an interview long ago talking about the financial crisis and the fact that the Federal Reserve seemed to be making a definitive bias policy decision regarding inflation, that they opted for inflating asset prices so that they could have a very strong jobs market. And the interviewer asked the question, said, well, but what about inflation? He said, that's a trade-off I'll make every single day.
Yeah.
And it's kind of, I'm not sure how that quote has stuck with me, obviously, because it was many, many years ago. But it's obviously bothering me too, because, asset price inflation typically doesn't end very well. And while it's true, the everyday common man has a job, his dollars are not going nearly as far, but the corporations, like you said, they love it.
Well, someone once said, "Hey, I thought government was like all filled with like corporate lobbyists. Like, shouldn't they be getting them back on size with this inflation stuff because they're the ones running the companies?" And I was thinking, what you mean, so that Lockheed can sell their jet for $2 billion instead of $3 billion? I think they're okay with the $3 billion price tag. No, they have no incentive to help push on the gears of inflation. Now, I would argue that there's a long-term incentive. But, if you're a CEO or COO ready to make your $6 million bonus for the year, I don't think you're necessarily thinking about, the 15-year inflationary bubble that's going to, happen by the time you're retired living on your private island. So I think there are some real things. And I'm not even like someone who's like a diehard anti-inflationary approach. I think I would rather us live in a gold standard economy, but outside of that, a slow growing inflation that's equally produced across the economy is fine. But I think, it's really easy to get that off the rails.
In your neutral kind of trading approach right now, where does that put your volatility trade?
Well, you know what? It's interesting. We skipped all of our volatility trades yesterday because the cushions just weren't there. In one day, listen to this, JD. Okay, I told everyone this. They're probably sick of me hearing about it, but
well, I haven't heard it, so I love it. So
okay, so before the news 2 days ago, so getting my days mixed up. Tuesday afternoon, Tuesday the VIX was up 12%, while the SPY moved up 7 cents. So the SPY moved up 7 cents. From 8 a.m. to, like 3:30 p.m. That's the difference. Well, the VIX was up 12%. And it's because they started pricing in that Trump announcement and all the unknowns and all of that. And so at about 3:30 p.m. or 3:15 p.m., I put on an SPX trade with a 2% cushion to the downside, meaning the market could do anything yesterday except for finish down more than 2%. And that trade paid me about 16% ROI, which is a really outsized ROI relative to typical SPY. Well, by 4 p.m., the market was up 0.7%, so my cushion went from 2% to 2.7%. And by 6 a.m., the market was up 3%, so my cushion was sitting at about 5.8%. And so I had literally a 6% cushion by the time the market opened yesterday on that trade. So then yesterday I went to put on the same trade. I thought, let's get a little greedy here with, because I'm not bearish. I don't think we're snapping back 2% to the downside. And that same trade was willing to pay me about a 3.7%. Same trade relative to the same levels with a market that just moved faster than the previous day, not slower, faster than the previous day. And the trade was paying a quarter or a fifth as much, which just goes to show you it's not necessarily TR. It's not actually about how fast the market is moving. Sorry, my mic went a little wonky there. It's not actually about how fast the market is moving. It's about the volatility index and how much they're pricing those options. So that was a very long-winded way to tell you I want to trade volatility. I want to trade these neutral trades. I did one today that's much shorter term, but there's not nearly as much value to get out of those ranges as there was just literally a couple of days ago.
And would you say that that's an unusual position for the market? I mean, that's a outlier of speaking in terms of statistics that I love. That's an outlier event.
Yeah, 20% intraday down on the VIX, even with the big rally, is obviously outsized. I mean, I think it's the second biggest one since the tariff pause, 11% day in the market. I believe it's the second biggest one since then. So yeah, I mean, definitely outsized. So what I'm doing is I'm just waiting to see if we can get another VIX pop. Which, if we're fully bullish, maybe we won't. I mean, maybe we'll actually get VIX here under 20. It's hard for me to believe that the market makers want to mess around with the VIX under 20 with Trump in office when those options are so chaotic and they have so much, risk on their hands in that environment. But if we're fully bullish, that thing's going to go down. And then I'll trade more directionally, but I would rather trade neutrally and use more cushion.
Trump is the perfect tout sheet, right? I mean, it would seem you have a 2-week window here for exactly the scenario you laid out to happen.
Right.
And so I think that's very wise and astute. I mean, if you remove the kerfuffle in the Middle East, I love that word, by the way. Kerfuffle.
Good word.
Isn't that a good word?
I thought you were going to say when you remove the impossible, whatever remains, however improbable, must be the truth. But
that's a good one too.
But yeah, no, go on the kerfuffle.
Well, I was just going to say that if you remove, and this goes back to the Delta mention, the earnings report for Delta, the stock soared on the fact that they were hiking their baggage fees, and everyone's following suit, and more money. Now, at some point, that's going to end, but we are next week, the flow of earnings reports is going to be coming.
Yeah.
And if you take away that Middle East kerfuffle, you've got conditions that are pristine for a bullish rally. So you may get that spike in volatility here for the next week or two, and just at perfect timing when actual operating results are supporting higher stock prices. So I think long-winded way of saying your trade is, I think, perfect for the times.
Yeah. By the way, I don't know if Silas has anything to say seasonality wise for this, but me and Kane, and it sounds like JD, all agree earnings, I think, are positioned to have a whole bunch of positive surprises because I think the market is depressed to some extent, although we're trying to make it, less depressed with 6% up from the lows or whatever we're at. But I don't think that's going to show up on the earnings at all for the majority of these companies. So I'm looking for several surprise positives on the earnings this quarter.
Yeah, I'm curious about Silas and your seasonality. We talked about that last week, Silas. We should probably just mention quickly here. Excited to bring Kane and Chris on. Estimated time of arrival is in 12 minutes. And then after that, we are going to be getting really nerdy and wonky and talk about mathematics. Don't worry, we're not going to test you on the mathematics, but I've got the white jacket from the laboratory and my Bunsen burner going on experiment 332. So we're going to share a lot of the details on that after we crown our trading competition champion. That's either going to be Chris or Kane. But before we get into that, Silas, do you have some charts that you can share with folks on kind of what you're seeing here for the next, well, I guess in what you're seeing now, and I meant more just do a 5-minute discussion on what you're seeing.
Yeah, sure. So, we talked about the seasonality in the last week, and the playbook is kind of following, pretty much the same as we saw last year. We had these kind of exasperated moves, and the playbook really is following, almost literally to a T when we had the Liberation Day stuff going on. I know we talk about the taco trade, but it's about as textbook a taco as the situation gets, and kind of following what Nate was saying is that I've been trading pretty neutral as well. So we follow a lot of insider transactions, and 95% of those transactions that we focus on are to the buy side, because insiders buy for one reason, because they think that their stock is going to go higher. They sell for many reasons, right? Whether it's taxes or they need liquidity for whatever reason. But so a lot of my portfolio is positioned to the bullish side because we're looking for, we're jumping on the crumbs of those insider transactions. So we have to take a little bit of short-term pain, when we mean revert a little bit. So I've been pretty heavy trading SPX options, especially on the bump up that we got yesterday, holding up relatively well today, and then getting into some of the commodities like gold and oil. But what we saw, I guess the question was seasonally, what we see now is just such a low liquidity environment. And what we saw last year was, an escalation to the maximum on all fronts. The situation sounds existential, extreme, and then you kind of extract those concessions that the other side would never have accepted under normal conditions. And that's the same dynamic that drove the tariff cycle. You announce sweeping, globally disruptive tariffs, maximize kind of that surface pressure, and then unwind selectively that while securing terms that would have been off the table otherwise. So all that occurring in an extremely low liquidity environment that we've been talking about. It creates conditions for these huge, large directional moves. So I can't step out and say, hey, I'm overly bullish. I'm bullish or bearish. I'm neutral, because I think it's impossible to really make that. I mean, for me at least, to come out and make that call when we're really truly in that headline driven event. And the day is young, the week is young, and we'll see what else is in store for us. And but with that being said, we do track a lot of the CTA and systematic fund positioning, and talk about what kind of powder do they have to unfold. So we saw systematic selling on the way down. Well, the current setup is again kind of a near identical replay of how last year unfolded. So, despite that initial rebound, the market remained under-owned, and institutions had significant room to scale back in. And then we saw an advance of about 19%. So the dynamic today is the same. And when we
Do you
talk about,
do you look at volume? Just to cut in real quick, is volume a consideration for some of the stuff you look at, Silas? And the reason I mention it is, I believe it was Monday or Tuesday. Volumes have been way down.
oh yeah, we've got we look at that data a lot, and it's important because especially if you're trying to understand why price is amplified directionally, it's because you have the systematic selling triggers that are kicking in, and then you also, on top of a thin, low liquidity environment, of course, those moves are going to be greatly amplified once things trigger, and especially now with the world, the trading world and environment we live in. All these algos are programmed to pick up certain keywords in the market, and that will trigger things on a thin book. That's why we're seeing it. So right now, though, I mean, aside from normal seasonal equity inflow, start of a new quarter, we've got additional flow coming in from to kind of that last minute retirement account flow that comes in that provides some liquidity. But keep in mind, I guess to further the argument about making a bullish case or bearish case, well, hedge fund net leverage were down 25 percentage points from 12 months highs, the largest deleveraging episodes on record. Also seeing increased ETF short selling by hedge funds mid-month, and retail investors also net sellers. But the bullish case of this is when the trend position models hit extremes comparable to current levels. The S&P's actually averaged a little over 4% over the following 4-week period, and about 8.2% over 3 months. And so if you can compare where we are now to past events, December of 2018, May of 23, ACA 23, April 25, we saw markets rebounding in that subsequent period. So I guess all else being equal, unless we're met with some extreme macro event, and I guess in this case, what headlines are we going to see, when we wake up? The breadth of the bearish positioning where we are now suggests kind of a medium-term recovery would be the likely higher probability outcome. But that's not to say it's not going to come without some volatility.
That's great stuff. When you do an option trade, then Silas, right now, are you what's your time horizon? Have you tightened things up when you're structuring trades? I think that'd be something curious, at least for me.
So on the swing trades, I still will look to go. I like to get out at least 45, 60 days out to give me some time. I'm timing that entry to make sure that I'm doing it at an appropriate level of value, what I consider a value level that should hold, right? So I'm trying to give myself enough time, in that 45 plus 60-day plus window. But I'm, again, my hedge, I'm not buying puts, and I'm not, buying VIX calls as my hedge. I'm going out and I'm putting out like broken wing butterflies on SPX and rut, and especially with the volatility and like what we saw yesterday, I'm able to go out spreading those out like 4, 5, and 7 days to expiration, and those are bearish positions, bearish broken wing butterflies. So I'm bringing in credit on that,
Okay.
and those are designed to just benefit from time decay on the inflated premium. So I've got a mix of like near dated, what I'll say, 5 to 7 day, and then but my equities, I'm not doing anything like really 2, 3, 4 day or anything like that on individual equities. I am doing I am doing shorter. I'll do 0 and 1 and 2 DTEs on S&P futures, crude oil, things like that as I see opportunity.
Do you have maybe before we've got a minute or two here before Kane and Chris join us? Do you have maybe a trade that we can leave folks with before they get here?
Yeah, we can. If anybody's interested in maybe doing a SPX. Now, yesterday was interesting on Tasty Trade. I tried to go out 7 days to expiration, and there were no five wides. Where I wanted to get into that 30 and 40 delta area, there were no five wides, and I'm looking now. They are. This was 7 days out. Actually, I looked 6, 7, and 8 days out. And when I got to that 30, 40 delta area, um, they were being broken into 10 and then even 20 and 25 wide, which was strange. So I went to XSP, which is the mini micro version of SPX, and instead of having single strikes up at that 30 and 40 delta, they were having five wides. And so I called Tasty Trade, and because I didn't know if it was just some in user error on my side or what was going on, and they said no, we're aware of it, and we're working with the exchange. So I thought, well, what a hell of a time to have a lack of options. No
Right.
pun intended. The lack of option information and flow when we were up 180 points on the S&P. So let me see something here. It's the 9th. So if we look at like the April 16th. So if I go out and try to get above that 60, I'm going to go out to 6,800 is what I'm going to do. I'm going to go out to 6,800's strike for next Thursday. That's the 4/16 expiration, so 7 days out.
Okay.
And I'm going to buy the 6,800 call, and I'm going to sell 2 of the 6,805s, and I'm just pricing this out. I don't know what it's going to look like yet. And then I'm going to buy the 6,830s. Ooh, gosh. So the broken wing butterfly, the bearish broken wing butterfly, is buying a 6,800, selling 2 of the 6,805s, and buying a 6,830. Generally looking for about $6.50, a $6.50 credit. That's pricing $9. So what I'm going to do is I'm actually just going to drag it out, and I'm going to adjust that. I just don't, yeah. So 68.15. So I go to 68.15s. That's bringing in 775. So I can go out even further. And if I'm burning up too much time, just let me know.
No, I was just gonna, David, are you getting all of this so you can put it in the
I'm
chat?
actually not, because I was busy trying to get Kane and Chris on here. I had given them wrong links earlier, and
So
Kane's here with
Silas,
us now. Chris is coming on.
Silas has an interesting trade that you can drop maybe.
Yeah,
and
sorry about
while
that. Normally I
while
would have been on top of that. Can you type it out in the chat there, Silas, or you want to Slack it to me?
I don't have a chat
Yeah, if
open.
you want to
Well,
Slack it to me, I'll post it.
okay. Yeah. Yeah.
Okay, and so I'll introduce the March. Well, I'm not going to call it March Madness, apparently, but the two finalists in our really kind of fun March trading competition. We started with 8 gurus, and for the Fireside Trader, I brought together 8 really interesting gurus that come at the markets in different ways. Pitted them head to head in round 1, with the winners advancing to round 2, and then those 4 contestants went head to head to bring us the final 2, which was Kane and Chris. And we started each week with a clean slate, $1,000 portfolio that they could deploy however they saw fit. And both Kane and Chris put on some trades last week in opening playbook, and I thought it would be great to bring them back today to crown our March trading competition champion. So welcome, Kane and Chris. We'll start with Kane since he was here first. And I know. Congratulations, by the way, Chris, and congratulations, Kane, too. I just because I want to say congratulations.
For very different things.
So maybe start with what your trade was, and give us the final tally here.
All right, so I just heard Silas talking about a broken wing butterfly to bearish side, which is right up my alley and similar to some of the trades that I did for this last week. One was a regular butterfly on Apple, just counting on it basically chopping sideways for the days that we had it on. So it was last Wednesday, and my trade actually ended on Monday. So I missed yesterday's volatility or then the day before, so which was nice. And then I had a SPY. It was a broken or unbalanced condor, so similar to unbalanced butterfly or broken wing butterfly, except a condor instead of that pointy spike in the risk graph of the butterfly. So the Apple did well. We made about a little over 30% on the Apple trade. That was about 2/3 of my allocation, and 1/3 of my allocation was on that SPY condor, which ended up making around 60% for a net gain of $382 on the 1,000. So that was 38.2% return.
That's awesome in 1 week. And I know Chris was right there too. It's going to be neck and neck. Who's going to hit the 3-pointer at the buzzer?
Yeah, well, the 3-pointer went to Kane from probably like the half-court shot. No, I'm kidding. No, so I had, when we talked about it last week, I mean, the fact that Kane had 2 trades in and the 2 winners, he had more profit potential than I did. So basically, I needed him to have like a break even, and then for my trade have a fighting chance. I did have a full winner. So my trade was on TLT last week, and I had an 87.50 by 88 on the call side and an 85 by 84.50 on the downside. It stayed in between those strikes for full profit. $312 out of the 944 risk that I put into it. So I had about a 31% return, but dollar wise, Kane gets it. So like I said, I'm like, if I'm losing to a winning trade, I can obviously tip my cap to Kane. That was a great setup from his perspective, using the $1,000 a little bit wiser than I did, because his max profit potential was higher than mine. And hats off to him for closing out the win. So
what was fascinating to me, Chris, is that both of you guys, you had to perform at a specific moment in time, and it's a good lesson for traders. I think that with the ebb and flow of prices and what have you, and profit potentials. I know I mean, you're like an Intel processing chip. I mean, you were going through all of the different possibilities from a profit standpoint in a given week. Before you selected on the final trade that you recommended. And that's the kind of discipline and work traders need to, I think, really pay attention to, just as part of their daily process when they're making trades, don't you think?
I agree. And I mean, today, so interesting kind of morning session that I ran this today. Guys, we have a 21 VIX and the expected moves have shrunk like by 70 to 80%. I mean, we've been watching like 50 to 60 point expected moves on the S&P. Now it's down to like 25. I'm like, listen, man, this is still a 21 VIX. The market is treating this like it's a 14 VIX, 15 VIX. It's crazy to see this. And so like the premiums are pretty garbage right now. And I'm not believing that the market is really like in this full volatility suppression right now. It's being treated like it is. But for example, the trade I take almost every single morning, it usually, I mean, we've been able to go like 70, 80, 90 points out of the money and get a decent premium to pull our trades in every day. We've been doing extremely well this year with this volatility. Today, the plus minus was around 49 pre-market. It dumped to like 26 at the bell. And I'm like, I am not going to put in like a 30 point out of the money trade today. So I did look at a trade this morning. I'm not going to take it. I want to get your guys' thoughts on this. I looked at a naked strangle on oil futures that goes out to next Friday. So this whole ceasefire thing is hopefully, still in play until next week, maybe limited volatility in oil, maybe. But I could do a 125 by 70 and pull in like 60 to 70 cents. Now it's a naked strangle, which is why I'm not going to take the trade. But I'm like, gosh, it's so interesting it's tempting to take that trade and just like it's futures wise, it ties up about $3,800. But I think I can make a pretty safe like 300 to $500 on the trade by maybe Monday morning. If prices are pretty quiet over the weekend, I'd say by Monday morning you could probably have a few $100 out of the trade and take the profit, move on with like a 25 to 30% winner. So that's about the only good thing I found, because I'm like so disappointed that the premiums have like seemingly dried up. And we're going to sit here and kind of wait and see what 6,800 looks like in the market, 6,600 looks like in the market. Is this positive drift? Is this risk appetite coming back in? It's all up in the air. We'll see what this ceasefire actually means. I think it's a big backstop by Trump. The Fed's not doing anything active. I mean, the PCE CPI, I mean, PCE came in pretty much as expected. CPI comes out tomorrow. That's going to be way higher in the headline. But point is, does the market care? I mean, it's like we're not even talking about inflation anymore. We're not even talking about AI disruption. We're not talking about job losses. We're talking about Iran and oil, and that's it. And now that we've put in the ceasefire, it's like, what's the next headline the market's going to gravitate towards and drive us all crazy with? Meanwhile, I'll just ask you guys this for the overarching question. Does this make you directional in any way, shape, or form? Are you still favoring like, a little bit more bearish? Is this a risk appetite move in your guys' opinion at all technically? I'm just curious what your thoughts are.
Yeah,
For me, it's
well, go ahead.
I was just going to say, for me, it's the sit on your cash, man.
Yeah, I did raise. I'm up over 52% cash right now. I was around 40%. I'm up to 52% cash. So yes, I've been de-risking, de-leveraging. That's what I used it for. I don't think the coast is clear yet, and I'm just going to kind of sit and chill for a little bit. Cash and
think
chill.
If we put the Middle East and can truly move on and really remove it from the equation, I think it's from a profit, and we are getting earnings season winding up or starting, just getting
Next
going
week.
next week. If we could be in a really great environment, but we have this overhang, and so in my Two Sigma service, we closed 6 positions, yesterday, which was unusual. I mean, we just and did it right away in the morning, right? I mean, gobble it up and
Right.
take your profits. And now I told my members, now we just sit and wait, and
Yep.
we'll cherry pick our opportunities when the numbers. Again, this is a good tease for what's coming here shortly with our presentation on experiment 332. But we make decisions based on what the numbers tell us. But I think earnings are going to be really good, and absent the Middle East, we should be gravitating higher.
Okay.
All right,
Silas?
well, guys, I need to be the time cop here
Oh,
because
okay.
I know Silas has somewhere else to be in a little while, and JD and Silas need to get to a presentation, and also Nathan wanted to pop in with something regarding next week. So if we can just wrap up
All
on
right,
the
well, here it
competition
is.
and the market recap, that'd be great.
Let's put the mythical crown on Kane. Congratulations to you
Thank
for
you.
Well played, sir.
taking
Good
down
job.
the trade-in competition. Greatly appreciate everybody participating. Really, both of you did such a wonderful job. It was exciting to watch how things unfolded. And so, Kane, hope to get you back next year for round two of what was kind of an exciting tournament. But both myself, Silas, and Nathan all participated. I was taken down by the champion, so I don't feel too bad about that.
I moved on to the Masters. I'm done with March Madness.
Round one, baby.
I told the team to call Kane's wife and have her stand by with a crown, but they couldn't get a hold of her.
No, she's still in bed, man.
Well, thank you guys for popping in today. Really appreciate it. So,
Of course. Good work,
have
Kane.
a great rest of your
All right,
day.
Great
Thanks.
session. Thanks, JD. See you.
Bye.
Bye.
Okay, Nathan, you're up.
Oh, okay. Thank you, JD. Sorry, a lot of interruptions today, a lot of housekeeping today. I posted in my Telegram, I have a very unique session happening Monday. There's a whole backstory to this. A guy I talked about, JD, you would love this guy, by the way. You should show up on Monday.
Yeah, please.
A guy I never met before until a couple weeks ago, walked me through his methodology. He's kind of an old school investor guy, almost exclusively trades small caps, micro caps. Usually his average hold time is like a decade, so it's like the most different from me you could possibly imagine. But he walked me through what he does, and I just found it so unique. And so I told him I would try to get him on as soon as I could. And I've been posting a couple times in Telegram. Hopefully you guys have been following along. I also did something really crazy that I've never done before, and I'll share that with you on Monday as well for a little carrot there. But he's going to be on Monday right after opening playbook. It's going to be very different than what you usually hear us talk about, but I think it's going to be very interesting and cool, and it's going to be very, very value forward. In fact, I don't want to give away too much, but I asked him, hey, is there any systematic to this? Because I know you have, this trade you made 5,000% on, this trade you made 6,000% on, but is that just because you're doing research and you find something you like? And he said, no, there actually is 7 main, what he calls DNA criteria I use in these small cap stocks. He scans them down from 6,500 stocks to basically currently 94 stocks that make that list of those criteria. And so he's going to share those with us. It's not going to be like a bait and switch kind of thing. He's going to actually walk you through those criteria on Monday. So I know not everyone in here is an old school stock investor. Most of you are like me. You probably trade more options than stocks, but I would make an exception for Monday if you're open to it. I think it's really worthwhile to be there. You'll really like him. Number one, he's a fun guy. He's got some cool stories. He's got a funny story about LeBron James following him on Twitter and asking about a stock trade, and it's just it'll be a lot of fun, and he's going to deliver a ton of value. So hoping everyone is going to be able to be there on Monday, and I'll be introducing you to the man behind the curtain, as I now recalling him, because how do I say things without giving it all away, Dave? It'll be fun. It'll be fun, and I did something crazy, and I'll share that with you too.
Hey, the clock's ticking. We're gonna jump to experiment 332. That show next week is going to be awesome. I'm not going to miss it for sure, because who says you can't teach an old dog new tricks?
That's right. I dropped the sign up link in the chat. It's pinned to the top, and it's in the announcements, folks. All right.
Okay.
332 it is.
It is 332. It's time for 332. Let me just get my screen set up, and we can segue right into that. Silas, we're ready to start revealing the secrets of really a statistical phenomenon that is omnipresent and can help traders generate income on a consistent basis week after week after week. That's kind of the gist. And so with that, let me get into the presentation. There we go. So Experiment 332, you might be wondering exactly what am I talking about here? And that's what we're going to be sharing with everybody today. But really, it's a statistical probability advantage to the tune of 99.7%, where we target $400 plus per trades multiple times per week. So welcome to our presentation on experiment 332. Of course, the disclaimer here that we develop tools and strategies to the best of our ability, but no one can guarantee the future. All performance results are from my pilot testing of a new method shared with you today in live trade alerts in the market from November 19th, 2025 to April 3rd, 2026. The strategy is 36-4 with a 90% overall win rate and an average return on winners and losers of 3%, closing in 5 days or fewer. The average winning trade is paid out $400 on a $5,000 starting stake, and every example you'll see today is based on the same starting stake unless otherwise stated. However, you do not need to place that much on any trade. You can enter with a considerably less capital amount, and please, please, please trade at your own risk. So Silas, I'll turn it over to you.
Yeah, thanks, JD. I'm really excited about this. But first off, let's be real. In trading, there will be losers. There's unfortunately no black box miracle system that prints out winning trades automatically. The whole purpose of the research and work with traders is to help give you an edge in the markets. And honestly, if you can't handle a losing trade, then you really shouldn't be trading with real money because, again, losses in trading have occurred and will occur in the future. So let's start here. Picture this. Imagine going to Las Vegas, sitting down at a machine and seeing this on the screen. It's a simple game with over 300 plus outcomes on the screen. And a spin could land on any of these green dots. But as long as it didn't land on the one red dot, the machine would pay out. Now, looking at the numbers, there are 332 green dots on this screen and only one single red dot. In other words, the historical probability of the spin working out would have been 99.7% in anyone's favor. They'd be a fool not to pull the lever. Now, of course, you and I both know Vegas would never give anyone that kind of historical edge. In fact, Vegas is always working against you to make